Hello and welcome. This is Cashflow 2.0, the only podcast that walks you through the treacherous jungles of your financial statements and leads you on a path to not only overcoming some of the most costly mistakes that many new entrepreneurs make, but helps you make your money start working for you right now.
Sweet.
Join us today as Pam changes your financial future and makes finance fun.
Hi, this is Pam Pryor, your first CFO, and I want to welcome you back to another episode of the Cashflow Podcast, Season 2. And today we're going to talk about a topic I know that makes a number of you either turn away, feel sick, get angry and frustrated, or else you just ignore it. And that is your bookkeeping reports, the ones you're actually seeing today. And we're talking we're talking to entrepreneurs who are a little further along the business spectrum, although I highly suggest that you get bookkeeping in place when you first start your business because it just takes so many future headaches away. But that's another story for another episode. Today, we're going to assume that you do get bookkeeping reports, but you're one of those people who gets them and looks at them, and one of a couple things happens. Either you grab hold of them, rip them to shreds, or shove them into a drawer because they make absolutely no sense to you, or you don't even look at them at all and forget the email is even there from your bookkeeper, or you do look at them and you get worried about something that doesn't really line up with what you think is happening in your business. Like you look at a report and it says you've spent this much for marketing or this much for Facebook ads, and you're thinking, you know what? That doesn't make a whole lot of sense to me. I haven't spent that much money, or I've spent more than that. Whatever your reaction is, if you're not one of those people who lights up and says, yes, I've got my monthly bookkeeping reports, I could not be happier. If you're one of those people that has a slightly different reaction than that, anywhere from disinterest to fury, then this episode is for you. And we're going to jump into, as much as I hate to say it, how much we as entrepreneurs actually contribute to the fact that our bookkeeping reports make no sense. We are not going to beat up on bookkeepers today because it's generally not their fault. It's not our fault either, but it is a result of our not fully owning and understanding what we need to tell our bookkeepers so that they can serve us properly or in a way that really benefits us. So here's a typical story that I think you might relate to of an entrepreneur who is one of my clients in the Profit Plan program. And what she has said to me, we'll let the name go unmentioned, but what she has said to me is, I can't stand looking at my bookkeeping reports. They make absolutely no sense to me. My bookkeeper has no idea what's going on. And so I backed her up and said, okay, let's talk about this for a minute. When did you start your bookkeeping? Started it in year 2 of my business. Okay, why did you start your bookkeeping? And this is really important here, this particular piece of it. And I think we can all relate. She said, well, in year 1 of my business, all I really did was grab all my receipts, the ones that I remembered not to throw away or that I happened to have gotten by email, and I stored them in a receipt file online, or I threw them into my Nike shoebox and shoved them under my desk. And when it came time at year end, and actually it wasn't even year end, it was about April 13th when I realized I had to file taxes and that there might be some business deductions in there that I could use, I said, and pulled out that box and then spent the next 2 days literally going through every receipt and looking at my bank statement and trying to figure out which of these items were deductible for tax purposes. And I knew I never wanted to do that again. I mean, picture it. I'm at a desk. There are receipts all over the place. And I actually was in this situation with one client and helped her sort through them. And I had to put them in piles. I had to figure out which of the expense categories in taxes they lined up to. I drank all the coffee in the world just to stay awake, and I hated every minute of it. And that's why finance and accounting suck, because I have to do that every year. And then she said, you know what? I realized maybe I don't have to do that every year. So I went out and got a bookkeeping service. I actually also got a tax accountant, and the tax accountant found the bookkeeper for me. That's a really typical situation. You get a tax accountant because that's kind of the first problem that arises financially, is you know that you can get the advantage of some tax deductions, but you don't know how to do it. So you find a tax accountant who files your taxes for you. So this particular client found that person. So I said to them, look, I don't want to go through having to put all this stuff together for you next year. So what do I need to do? And the tax accountant says, you need to get a bookkeeper, which makes a ton of sense, right? So my client said, okay, get me a bookkeeper. And that simple sentence, okay, get me a bookkeeper, is where everything fell apart for the future value of the bookkeeping records. Because the tax accountant went out and did just that, exactly the request. And my client didn't know she'd said anything wrong, nor could she have possibly known she said anything wrong. So what did she say wrong? What was wrong about the statement, okay, go get a bookkeeper, or words similar to that? The problem was the person to whom she was saying it. She was saying it to her tax accountant to fix a particular pain point that she had. Okay, so follow me through this. She had a pain point of having to throw those receipts together and figure out what was what one time at the end of the year. She fixed that by getting a tax accountant. She knew she didn't want to go through that pain point again, so she said, hey, tax accountant, go get me a bookkeeper who will take care of that problem. Perfectly logical solution. But here's the issue. The bookkeeper also, as you'd expect, sends reports to my client. And she gets the reports, but they make no sense to her at all. She looks at them. She gets the standard reports that most of you have probably heard of. We'll talk about all of them during the Cashflow podcast eventually over time, hopefully buried in fun stories. But in this particular story, she got a profit and loss statement or a net income statement. She got a balance sheet, which she knew nothing about, because why would you as an entrepreneur? A balance sheet is not generally something you've studied if your expertise is in life coaching or business coaching or even developing a great product. And the third thing she got, and I'll tell you what, she was rare because most people don't get this, was a cash flow statement. But hold that thought for another day. But she would get these 3 reports every month, and she'd look at them, and they didn't line up at all with how she thought about what was going on in her business. So she knew she had a one-on-one coaching business, and she knew she sold some online training. Those 2 things. And she'd look at this report that came in that was just a piece of paper that said, this was your revenue for the month, these were your expenses for the month, here's your net income. And she'd look at that and kind of cock her head and say, well, okay, if that's my net income, where's my cash? And could not, through the other reports, that was not evident to her in the reports. Now, that's just one of the many questions or confusions that can happen when you get these reports out of context like that. But most people who start off this way, who start off by having a tax accountant get their bookkeeper, do get reports like this that just don't make sense when it comes to their business. Now, I want to talk to you about the other extreme for a second, and then I'll talk to you about what went wrong with this particular example and how to make you one of the people who ends up on this other side of the spectrum. So, on the other side of the spectrum, there's the business owner who is screaming, finance is fun, finance is fun. My clients, by the way, all think finance is fun by the time I'm through with them or working with them. But that business owner looks forward to getting those 3 reports every month, plus a couple of others, because what we've done with them, or what they have, is information that they can look at, and they're wanting to know what's happened in the month so that they can very quickly say, okay, if I do A, B, C, and D, if I move these 4 levers in my business a little bit, one way or the other, I can make those numbers different next month. In other words, they're getting a piece of paper with numbers on it that absolutely relates to how they think about their business. So all of a sudden, this thing that my other early on client was looking at and saying, this makes no sense to me, I have no idea what it is, has turned into, I can't wait to get these reports because I can see how I did in my business in the things that I understand, like how I price my product, where I get my marketing, how my Facebook ads are doing, whatever the particular lever is in the business that this person owns. So how do you end up on the bad side of that spectrum instead of the great side of that spectrum? Well, it all starts with that very first bookkeeper. And it's not the bookkeeper's fault. If you think about what we've done, we're going to dive in on this now. If you think about what we've done when we hired that first bookkeeper, we hired him, or we had the accountant hire him, the tax accountant hire him or her, to solve my tax problem, which they are probably doing incredibly effectively. But the person who has framed up what you need to know about your business from your financial reports is the tax accountant. And the tax accountant's job is to make the tax accountant's job the tax accountant's job easier. So they have set the bookkeeper to keeping things in a way that makes their job easier, not in a way that makes the information more meaningful to you as a business owner. So here's the rub. Bookkeeping is not just meant for the tax provider. Bookkeeping done the way that we can set it up to be done, and we'll cover in all of the episodes of this season's Cashflow podcast, serves two masters, right? It serves you because you know and understand and set it up in a way that gives you the information you need to run your business. And, oh, by the way, it gives the tax accountant what they need as well, so that you never have to sit down with a box of receipts again. So the only thing that my client did wrong before we met was didn't know, and it wasn't her fault, I can't even say she did it wrong, she was not aware that you can get more than one benefit out of what you're paying for a bookkeeper. And it all has to do with the fact that she had the tax accountant, instead of herself, define the outcomes from that bookkeeping engagement. That's it. That was the only difference. So what is it we want to tell the bookkeeper? I want to dive into that a little bit here today to talk about how you get from person A to person B, the one who loves and can't wait to see their financial reports. But we are going to go into it much deeper in future episodes. But for now, the big thing you want to do, it has to do with how you define your business in your own head and in your own language. Okay, we're going to talk on a future episode here very shortly about how to identify and hire the right bookkeeper. But right now, let's talk about what you tell them when you find them. Okay, and what you tell them when you find them is, hey, here's how I think about my business. I think that I run two different things. I run a one-on-one coaching business, and I have some training modules. And I want to see my business, and I want to see how it's doing financially through that lens. I want to define what I see. So when you give me numbers, I want to very clearly see how much I'm spending and making in my one-on-one work and how much I'm spending and making in my training work. Because then you'll have the information to decide whether you want to keep in what you want to invest in, where you're spending too much money, where you're not spending enough money. We'll get into the whole other advantage of once you have that foundation. Oh my gosh, this sets you up for so much fun, because then you could actually start predicting what's going to happen in your business. But that's for another day. For today, I just want to get across to you that the thing you want to do when you hire a bookkeeper is not have your tax accountant specify, here's what I want you to do, bookkeeper. You jump in there and you say, bookkeeper, I want to see my business the way I think about it. So if you call something, let's say you call something, I think of this as a subscription when I pay my membership fee to this training class every month. Well, darn it, have the bookkeeper call it a subscription. It does not have to be called hosted services or information technology or anything else that the tax accountant wants it to be called. Because bookkeeping is flexible enough to do both things, to give you exactly what you want to see and give the tax accountant exactly what he needs. So you tell your bookkeeper how you think about your business. You tell them what expense categories you have and what you call them. If you call your revenue, or if you call your revenue income, then they should be using your label. Yes, there's a distinction. And when you're an 8 or 9 figure business, we'll deal with making sure those distinctions are right. But right now, the whole point is to make sure that what you're getting from your bookkeeper, that you're paying good money for, likely, is useful to you. And that's so easy to do if you just make sure they understand how you think about, talk about, and run your business, okay? We will talk about how to find the bookkeepers that really understand that and put that into place for you, as opposed to the ones who will resist it and tell you, things have to be done this way, because it's just not true. That's a lie that bookkeepers tell. Bookkeepers who don't want to be flexible and want to run as many people through the mill as they can because they're a large national company with a lot of overhead, or they're a regional company with a lot of overhead, or they're a small proprietor bookkeeper who honestly just doesn't know any better. They might tell you you have to look at things a certain way. You don't. You're the business owner. You get to look at the business any way you want to, and you get to ask your service providers to make sure you get information that lines up with how you think about it. And that's really what I want to focus on today. So just to recap quickly, a lot of times we end up with a bookkeeper because of that nasty pain point of having had to do our taxes all by ourselves, and it tore us apart, having to spend 2 or 3 days diving through all those receipts. Receipt diving, I call it. It's been called worse. And so we get a tax accountant, and we have our tax accountant hire the bookkeeper, which is all great for solving the tax pain point, but it sets you up for a future of not getting all the value you can out of the dollar you're spending on that bookkeeper. And most importantly for me, it sets you up from having fun it keeps you from having fun with finance. And we can't have that. Finance has to be fun because it's such a key element of your business. It's such a key element of what you're trying to do that you need to enjoy it as a component of your business as much as you enjoy all the other pieces. And I am on a mission to make that happen for you. So let's get the right bookkeeper in place, which we'll talk about on another episode. But let's tell the bookkeeper, whoever they are, how we think about our business and how we want to see our financial numbers. You will start to look forward to those numbers coming to you instead of shoving them in a drawer, tearing them up, or throwing them in a trash can. Trust me on this one. Define how you think about your business. I'll see you next time. You have a great week.